Good evening, guys. It is Tuesday, April 22nd, 2025. This Bathrobe business. I got my decaf coffee and I got the news. So I did not have a video yesterday. It was my fiance's birthday, so we went out, we celebrated. So I'm just going to jump into the stories of the day. But one major thing I have to talk about, which is going to be one of the first things I cover, is the price of gold. So gold did phenomenally in the day that I was gone. It hit the benchmark I had been promising. So I originally had said gold was going to hit 3,500 by the end of the year. I then revised that. What was it, a couple weeks ago when I said it would probably hit 3,500 by the end of the month, and sure enough, it did. It hit 3,500 on April 21st, 2025. So I came in under estimate. Congratulations. Nobody cares. But it did hit 3,500 for a split second. It did fall back down today, but yesterday at one point it was above 3,500 as 3,506 looks like is the all-time new high for gold. Definitely concerning. One thing to always consider, this is partly market instability, but this is also kind of inflation, and not even kind of. There's the old adage that gold doesn't appreciate, everything else just falls in value. So this is in direct response to the value of the dollar. So you can't do anything but call this itself inflation when gold is performing the way that it is. When you see this rocketing up as drastically as it is, there's just no way to not call this inflation when the price of gold is reaching these kinds of levels. So even though that it's not a type of inflation that reflects in CPI or PCE or whatever other metric you want, this is inflationary. This shows that there's inflation in the market or predicted inflation in the market because there's no other way to call it that when you've got these kinds of numbers. Now, another thing I want to do is fire a few shots at crypto because at the same time that gold is rocketing and up, and gold has been increasing in value since really right after lockdowns and COVID. It started after everything had settled. All of a sudden, as inflation grew, so did the price of gold. In fact, the price of gold started growing before we actually got real inflation numbers coming through. So we're talking about April, May of 2021 is when it really started to, no, I lie. It started in the fall of 2020 is where it steadily started to rise again. Not drastically, but we were seeing it reflected in the numbers. Then once real inflation started getting reported, it started climbing ever and ever higher. So within just a couple of years, it's more than doubled. And it's going to continue. Now, why this is interesting is let's compare that to the price of crypto. So crypto at this same time, this is the real test of crypto, right? It's saying the whole argument for Bitcoin is that it's a good alternative to the dollar and the SWIFT system and everything that's wrong with our economic system, that Bitcoin is the cure for it. However, Bitcoin has not performed as a cure. In fact, in the last, 5 days, it's plummeted and risen just like the stock market itself has. So the argument that crypto is going to save us just simply isn't true. It's just a financial instrument. And despite the fact that we're seeing all this instability, all of this chaos, no one is flocking to crypto. Nobody. Everybody is flocking to gold. There was a report on Bloomberg today. I didn't include it in today's articles, but in Bloomberg, they're talking about how the rich are investing in Swiss bank accounts in gold. So anyone with real serious money is going into real assets. Crypto is just becoming more and more irrelevant as we've seen in this economy, because even when things get unstable and there's chaos, nothing happens with crypto other than it falls and moves just like any stock or equity. Now, speaking of which, humble brag, I do have to share this because I have been doing this fairly successfully over the last couple of weeks, is every time the stock market, falls, I buy stock, and every time it rises, I buy up some more, I sell it. So just wanted to share an image with you guys. Where is it? So here is my current stock portfolio that I've just been, this is my trading portfolio, I should say. So I bought a number of stocks and I've seen great gains in the last couple of days. So great. Not to brag, but just to kind of give you a little bit of credence to the fact that I kind of know what I'm talking about. Not that this is a stock channel. This is really about business, but yeah, I've taken advantage of the situation. When it falls $1,000, I go into the Dow and I see what stocks are plummeting and what are below their 13 and 50-day moving averages, and I buy them up. And when they recover, I sell them. So I'm probably going to sell most of these tomorrow, especially since the stock market gained about 1,000 points today. And then in addition, uh, it's probably going to gain about 400 to 600 tomorrow. And the reason I say that is another piece of instability was the fact that Donald Trump was saying that he wasn't saying, but everything that he was hinting at was that he was going to be firing Fed Chair Powell before his term ended, which I never really understood the legality of it, because I don't think he has that type of authority without restructuring the Fed, which I don't think he can do without congressional approval. But it was clear that he was using the bully pulpit to put excessive pressure on the Fed, and that caused the market to retreat pretty substantially in the last few days. He has now pulled that back. He says he has no intention of firing Fed Chair Powell and will let him serve out his term until the middle of next year, I believe, or it could be the beginning of next year. But I know he is serving through 2026. So that is bringing stability back into the market. If we go to CNBC.com, we see that already the futures market is showing that there's a gain of about 400 points. So stability has to some extent returned. So let's talk a little bit about headline stories. So one of the ones we have to cover is Tesla. Tesla has reported a massive loss, a 20% drop in auto sales in its first quarter, missing Wall Street estimates, and not missing it by a small factor. The estimated revenue was supposed to be 21.1 billion. They came in at 19. Earnings per share was supposed to be 39 cents per share. They came in at 27. This is a consecutive loss for Tesla. Every time Tesla reports earnings, they seem to be down. Their car sales are down. Their performance are down. Their revenues are down. They're just being crushed on all sides, both domestically and internationally. As we've seen in China, nobody really seems to care about Tesla anymore either. Tesla is trying to save face in a number of ways. So right now, Tesla's talking about moving into India. This is just a way to prop up the stock price. They're talking about how Musk is leaving Doge and coming back to Tesla. They're talking about the robo-taxis again. They're talking about, what else did they talk about today? There was some other way they were trying to pump this stock up. I can't recall now, but there was something else I read that they were trying to do to stimulate the rise of the stock. But everything is seeming to be just a way to save face. This company is performing really, really badly. It doesn't bode well for American manufacturing, especially in this current climate, not to be kind of negative, but I think it is something to say that when you've got a company like Tesla performing this badly and we are facing major tariffs, it does kind of make you think, are we able to perform as well as we think we are when we can't seem to get clear manufacturing off the ground? Kind of to back up that claim, I wanted to share this article from Intel about Intel. This is from Reuters. Intel is set to cut about 20% of its workforce within the next couple weeks. Looks like, let's see, this week they're going to unveil a plan to cut 20% of this workforce. Now, this isn't Trump's fault, and I try not to pass blame on this channel. I try not to get too political. The only reason I comment on Trump and tariffs is because it's obviously in the news. It's almost unavoidable, and I tried to avoid it as long as I could. But this is actually kind of, I would say, Biden's mistake. Because if the tariffs are entirely owned by Trump, then this is owned entirely by Biden, especially since Tesla received almost $8 billion from the CHIPS Act. So they received $8 billion. They're still in the toilet. They haven't delivered on any new type of AI chips like they were promising. I think they did release something, but it has had no market penetration. They've laid off their CEO. They are now cutting 20% of their workforce. Let's not forget, they have already cut in, I believe, last year. Time flies so quick, I can't recall if it was last year or the previous year. But this isn't their cut. This is a consecutive cut. So they're cutting their workforce again. And they took $8 billion of our tax money and have done absolutely nothing with it. They haven't created jobs. They haven't created a new product. They haven't innovated. They've done absolutely nothing. Another kind of testament to the fact that we just really are not good at manufacturing. We really need to get our shit together, because if we're going to be cutting tariffs and trying to become self-sufficient, we're actually not. But that's the current claim. But if we were to try to do that, this does not make the cut. Like we're not able to, we can't seem to produce anything correctly anymore. Boeing is an American failure. Intel is becoming an American failure. Tesla is an American failure, and it's kind of a recent company to do it. And I'm not even going to get started on the big three. There's problems there I'm not even going to delve into because we could be here all day. So we really need to get our game together if we really want to become a manufacturing powerhouse. This is also one of the reasons I don't think we will. I think all we're doing is just restructuring global trade away from China. I don't think we're reshoring any of those jobs. I think that is any reshoring that happens can only happen with the new industry, not with any existing industries. It's just not possible to transplant those jobs given labor costs, given current real estate costs, taxes, regulatory issues. We're not addressing any of those in order to bring those back. Those are a bigger barrier than tariffs and trade policy ever is. Next story I want to cover. It's probably going to be the last story of the day. This one is really interesting from a business perspective. So Netflix is eyeing video podcasts. So the reason I think this is interesting is kind of multifaceted. So Netflix is slowly, I wouldn't say slowly, this has kind of been their trajectory for a while, but Netflix is separating itself exceptionally well from other streamers in that they're not necessarily in the streaming service anymore. They're more and more becoming the alternative, a true alternative to cable, right? For the longest time, streaming has been, you cut the cord, you go stream, but you've needed multiple services. Netflix is working really hard to become a one-stop shop for that. They've got live events. They've got sporting events. They're now they have multiple tiers of pricing. They're now trying to move into podcasting. I think this is a fantastic idea, especially for their stock price. This is one of those things where anytime a company can offer a viable new product, that product often increases the company's multiple much more than that individual product did in the private market. So what I mean by that is, for example, Joe Rogan's podcast, obviously a great example of this because Spotify brought it in. Joe Rogan had a successful podcast. He was making probably millions of dollars a year through advertising and sponsorship. However, when he moved to Spotify, they gave him supposedly 300 million. The numbers aren't really clear, but as Joe Rogan says, he got FU money. So he got a massive amount of money. It was a contract over multiple years, but he got this massive contract. But it caused the stock price to, increase by, let's say, 10. I don't know the exact number, but I know it was by a valuable percentage. Well, that percentage gain was a multiple much higher than anything they would have paid Joe Rogan. And now they have exclusivity where people have to go to their platform in order to view it. I was not a subscriber on Spotify. I subscribed because of Joe Rogan's podcast. So anytime you can bring in a product like that already is pretty powerful within the market, it usually raises your stock price by a multiple much greater than that product was in the private market. This is a great idea because even in my own personal life, I've talked about this before. We have dental companies. There's a dental product out on the market. It's essentially a toothpaste, and I've tried reaching out to the company to try to purchase them, for our company to purchase them, because currently they're not really a company, they're more of a product. So they're trying to sell into the private market as an alternative to essentially Sensodyne, and they're making really no headway. Within our company, we already have a distribution system through our existing network. So that product will be worth much more to me and our company in our distribution than it is to them trying to sell independently. So it's a good product. Its sales are very minimal. They're not getting much market penetration, but within our current existing suite of products, we'd be able to do much more with that than they ever would. So this is just a fantastic business strategy. I think it will be successful, especially since all of this has been done already a couple times. Joe Rogan, Rumble has had a few exclusive contracts. So I think this is going to be very powerful, very successful for Netflix, and I think this will cause the company's stock price to rise for sure. I think Netflix is a fantastic investment from a stock portfolio standpoint. I think they're recession proof. I think they've consistently returned over the last year since they've restructured and kind of focused more on content. They have all these live events. They have sporting events. The whole Jake Paul thing, while we may think that was kind of a crappy crappy night of entertainment, it brought in massive views. So from a financial standpoint, from a business standpoint, it was fantastic. So I highly recommend Netflix. I think they're making all the right moves in this economy, more so than any other stock. You'll notice it wasn't in my little screenshot there because I don't think it's a trade. I think it's a fantastic investment. So I'm not looking to trade Netflix. In fact, it hasn't really gone down during all of this turmoil. They reported fantastic quarterly results. And so that's why I didn't purchase them, because they weren't really down by any substantial amount to make any money on it. So yeah, that's pretty much it. Thanks for tuning in tonight, and I will see you guys back here tomorrow. I hope you have a productive Wednesday.